Hello, investors. Today, we will delve into an overview of General Dynamics Corporation. General Dynamics is the world's fifth largest defense contractor, boasting a market capitalization of $77 billion and trading on the NYSE. Their P/E ratio is currently at 23. The company's operations are segmented into four primary divisions: aerospace, marine systems, combat systems, and technology. Despite being predominantly a defense-oriented entity, General Dynamics exhibits commendable diversification owing to these four divisions, which we will now examine in detail. The Aerospace Division is responsible for the design and manufacturing of the renowned Gulfstream family of business jets. There are nearly 5,000 Gulfstream aircraft in operation globally as of 2022. In addition to manufacturing, the company also generates additional revenue through a network of service centers worldwide. A recent notable addition to their product line is the ultra-long-range, ultra-large cabin G800 version of the Gulfstream jet, which also stands as the industry's longest-range aircraft. Our Marine Systems segment is at the forefront as a leading designer and builder of nuclear-powered submarines, and it holds a distinguished position in the design and construction of surface combatants, auxiliary ships for the U.S. Navy, as well as Jones Act ships for commercial customers. Electric Boat serves as the prime contractor for the Columbia-class ballistic missile submarine, a pivotal $113 billion program entailing the construction of 12 boats, considered the Navy's top acquisition priority. The division also leads in the construction of the Virginia-class attack submarine, with 17 boats planned for delivery through 2032, 9 of which will include a novel payload module augmenting strike and special operations capabilities. Bath Iron Works is tasked with building and managing the lifecycle support for the Arleigh Burke-class DDG-51 guided missile destroyers, with a backlog of 10 ships set for delivery through 2029. The Combat Systems segment is instrumental in designing, manufacturing, and sustaining some of the world's most lethal, mobile, and survivable land combat platforms, in addition to munitions and medium-caliber armaments for the U.S. and allied forces. This segment's expansive installed base of nearly 23,000 vehicles across approximately 40 countries worldwide affords a strong foundation for future modernization programs, support, and sustainment services. Notably, the Land Systems unit is the exclusive producer of two principal platforms central to the U.S. Army's warfighting capabilities: the modernized Abrams main battle tank and the Stryker wheeled combat vehicle. Moreover, in 2022, Land Systems was chosen to manufacture the Mobile Protected Firepower (MPF) vehicle, slated to enhance the firepower for the Army's Infantry Brigade Combat Teams (IBCTs). Our Technology segment, comprising General Dynamics Information Technology (GDT) and General Dynamics Mission Systems, delivers a comprehensive range of services, technologies, and products that incorporate specialized hardware and software, addressing the burgeoning demand for technology solutions vital to our customers' missions. In terms of financial performance for the year 2023, General Dynamics reported revenues of $42 billion, marking an increase of 7.3% from the preceding year. However, net earnings saw a slight decrease of 2%, totaling $3.3 billion. The earnings per share stood at $12.02, with operating margins at 10.9%. A closer look at the Aerospace Division reveals earnings of $8.5 billion and a net income of $1.1 billion, with improved operating margins of 13.5% and service revenues experiencing an 8% growth. The Combat Systems Division reported revenues of $8.3 billion, the highest in a decade, with record orders. Nevertheless, the margins saw a slight decrease from 14.7% to 13.9%. The Marine Systems Division's revenues grew to $12.3 billion, although margins contracted from 8.1% to 7%. The Technology Division recorded revenues of $12.9 billion, a modest increase from the previous year, with similarly compressed margins. Looking ahead to 2024, General Dynamics has forecasted revenue growth to $46 billion with improved margins, particularly in the combat segment. With the U.S. defense spending projected at about $1.6 trillion in 2024, according to the Department of Defense, and the Navy receiving the largest allocation, the prospects appear promising. Furthermore, NATO countries are anticipated to bolster their defense spending to at least 2%, potentially amplifying General Dynamics' revenue streams.
The chart shows the share price of General Dynamics. It is at all-time highs. It is never a good idea to buy at all-time highs. We need to wait for price to correct, and if it does not correct, we miss the boat and no big deal for Muffet.
The Muffet take. We believe that U.S. defense spending will remain robust in the current geopolitical context, and increased expenditure from other NATO countries is expected to escalate revenues. General Dynamics demonstrates stable cash flow with orders extending up to 2032. The submarine division is uniquely poised to benefit as the sole builder of nuclear-powered submarines. The company forecasts revenue growth of approximately 10% with enhanced margins. However, revenue growth is trending at a gradual pace. At a P/E of 23, the stock appears to be slightly overvalued. We should wait for 20% correction before considering as a stock in your portfolio. This just for information purposes, only to help the investors make a decision and not investment advice or recommendation.